Hey everyone, we're live. Okay, we're just getting a little bit of a late start today. It's just one of those days. We've got a couple of things to talk about. Why is today a good day when it was really just a ho-hum kind of day? Not much going on. I'll tell you why it was a good day when we get into the live stream. We'll go over some stock market stuff, some bond market stuff, some crypto. Yeah, that's right, crypto, because you really can't talk about stocks and bonds and the market and a personal finance update without bringing into crypto. It's $1 trillion plus market. If something were to happen to crypto, it's big enough now at this point that it's fair to say it would spill over into the rest of the economy. So we're going to just roll a quick introduction, and we're going to give you the update that matters. We're going to go over the news that you need to know and how it affects you. So here we go. Boom. Okay, so much for the, how about the vagaries of live streaming? For some reason, LinkedIn is having difficulty on their end, and it is not allowing me to go live on LinkedIn. So I'm just coming to you right now from Facebook and YouTube. We've got a couple of people out there watching right now. Thank you very much. By the way, if you give it a thumbs up, I'll be able to see who you are, who's watching. Don't be bashful. If you're watching this in the live stream right now, let me know by giving it a thumbs up so I could say hello to you. If you have any questions or comments, you hit me up if you have any questions, hit me up in the comments. How about that? Questions, words of wisdom, words of encouragement, they are always appreciated. If you're just joining us in the live stream, thank you so much for joining me. I really appreciate that. Your time is very valuable, and it means a lot to me that you chose to spend some of it with me. This is Be the Boss of Your Money. It's my live stream. It's about personal finance and like a gazillion things that fall underneath that personal finance umbrella. So we could talk about credit scores, borrowing, assets, investing, and that's where we get into crypto and the stock market. We talk about strategies for savings, 401k plans. We get into some tax information as well. I don't want to say tax advice. I'm not a CPA, and any tax advice that you seek, you should ask your own tax advisor. Okay, so let's see who's out there. I think we've already got a comment out there. Keith is out there. Keith is out there. All right, with the thumbs up. Keith Wilson Financial Advisors. Follow Keith on LinkedIn. Seriously, Keith Wilson. He puts out some of the best financial content. He's got a great way of teaching important financial concepts with humor, and it just sinks in. Okay, thank you very much, Keith. I really appreciate it. I'm going to see if we can get LinkedIn going again. I don't know what it is. They just keep saying an error occurred. Wait a moment. But, our show is going to go on. I think it's an important day today because it was such a ho-hum, kind of day for most of the day. By the end of the day, it actually is legitimately a pretty good day. So let's just take a quick screen share. Okay. This is just how the market ended today. Let me make that a little bigger so you can see it on your little smartphone screen there. Okay. The Dow is up 175 points overall. Overall, I would say that is a pretty good day. So let's give that a round of applause for a good day. Round of applause. All right. So we had a good day today overall in the markets. It wasn't this good all day. It was just kind of a really good finish. S&P up 6.65%. NASDAQ up over 1%. So the NASDAQ clearly the standout winner. I'm happy about that because we had those rough 2 weeks in the NASDAQ, work from home, stay at home stocks tanked. They came roaring back last week. The S&P and the Dow hit highs. We're waiting for the NASDAQ, but no one has anything to complain about. We're right near highs across the board for everything. It's a remarkable market. Russell 2000, NASDAQ, S&P, Dow, they're all right at or near all-time highs. The VIX, that's the red box. You want that to be lower. We've been talking about 30 was the demarcation. That was the line that we needed to see it get under. We want the VIX to go down. That's a good red, not a bad red. And then what happens after that is 25 was the line. Now we need it to be under 20. If we get it under 20, a lot of quants in the market feel, a lot of analysts feel that that means we have a whole new leg higher. The good thing about the market is it's spreading out. It's not just the technology and the screen stocks and the stocks that make our lives livable while we're staying home, while we're remote working. So other stocks are going up, airline stocks in particular. So I just want to see if I could get the right information going. I'll just punch up the quote for Southwest Airlines, and the news I'm looking should come under there. Okay, so you see Southwest Airlines hit a 52-week high. Guys, it was a year ago when the shutdown started, the 16th, 15th, 16th of last year. And here we are when we thought the airline industry would go out of business. A couple of things happened. First of all, we had the PPP loans, and airlines were given a lot of life support, just a ton of life support. Okay. American Airlines CEO, demand is improving as vaccination increases. Air travel jumps as vaccinations spur bookings. The thing that I'm looking for is not what I'm seeing. It doesn't really matter. I'll stop the screen share for a second. What I'm looking to tell you is this. TSA figures came out on Saturday, and they're the highest they've been in a year. And it's actually the airports are getting busy. People are flying. I guess what I'm trying to say is flying is starting to boom again. And the airlines who have been so good at cutting costs and learning how to live on less are doing so much better now. That's huge, that the airline sector is doing so incredibly well. So it's something to be very happy about. And, this is something we've been talking about. We spoke recently about stocks like GM and Southwest Airlines and other reopening plays. And in particular, GM and Southwest, I did a whole thing about them, about companies that had to cancel their dividends and who are going to start paying dividends again. And then you get dividend growers again. And that really, it's just proven that it's proven that dividend growers are a good place to be. And they actually do better than high yield dividend stocks as on the whole, as a group. You compare the exchange traded funds, for example. So let's get back to the share screen. I'll put myself back in there, back into the share screen. Let's take a look at some of the watch list. Boeing backed off a little bit. You can see right there. But otherwise, that stock has been on a really good tear. But UAL, American Airlines, GE, I did a whole live stream about GE that looks like GE is back. It's off that multi-year low. They've reinvented themselves. GE is like now, it really does deserve to be called General Electric, but in the ESG space, in like the wind space, wind energy. I mean, no one is a bigger maker of turbines. Something like 9 or 10% of this country's energy needs are being met now by wind energy. And I know there was a lot of flack in Texas with the big freeze out that they had, and then the big ice storms and everything. And people said, "Oh, it's because subsidies were given, to wind and the turbines froze." That's kind of not true. No, it's not true. It was the natural gas and oil that couldn't flow, and the electric wires that wouldn't work in the extreme cold temperatures because the state didn't prepare for cold weather events. If just the wind energy went down and nothing else, state would have been fine. The wind energy just helps support right now the fossil fuel energy that they're getting. Okay, so let's keep going. So not a bad day for airlines. Not a bad day for if you drive or fly. Those stocks were really good. Let's just take a quick look at some of the FANG stocks. We look at these stocks every day because they're such a big part of the market. overall more up than down, but Facebook up 2%. Facebook is recovering from back when, maybe was it 2 months ago? The Justice Department said they're looking at Facebook, maybe, talk of maybe breaking it up. They're going to go after it really hard. Facebook has basically recovered fully from that moment. Stock up over $5 today. Netflix, good day. Google. Look, what we really care about with Google is that it remains over the $2,000 mark. Amazon, it's the $3,000 mark. It did dip below 3,000 a week and a half ago, but it basically came right back over 3,000. So it held. And Microsoft, I'm not really sure what the big number is that I want to see hold up on Microsoft. These are my own opinion, by the way, what numbers I want to see hold up on these stocks. But I think Microsoft about 210 is the number that we need to see it hold. Because if these stocks break below those numbers, it means they're breaking down. And if one breaks down, they'll probably all break down because they trade more or less as a group as opposed to just one stock at a time. So that's what I am basically, that's what I'm thinking. Okay, so let's move on. We've got a couple of other quick things to look at. The sector ETFs, that's what I look at every day. All right, so the big winner is consumer discretionary. That's economically sensitive. Utilities went up a little bit because interest rates stabilized. Real estate was up a bit. Real estate's coming back. Technology had another good day. Industrials had a good day. If you see these lines on the side, that little red space is how far these sector ETFs. These are the sector ETFs that represent the 11 major sectors of the economy. They're all pretty close to highs, if not at highs. Communications at a high. Materials, even the ones that are off today. The worst performing sector was energy and financials. Those are the worst too. But they had such good runs. XLE is up over 40% just this year so far. The fact that they pulled back a drop doesn't really cause me a lot of concern. Now let's take a look at some of the other things that we want to take a look at. It's not really major averages. Okay, so we went through the major averages already. Let's take a look at crypto. You know what happened? Let's get to crypto over here. Okay, so Bitcoin was off 6%. It did hit $60,000 on Sunday. It broke a little bit above 60,000. So it's the fact that Bitcoin, excuse me, I was just running around outside for a few things. Literally, okay. The fact that Bitcoin backed off a little bit, it doesn't really cause much concern for me. The concern is that Bitcoin has really, I would say Bitcoin is coming of age. The whole crypto space, when I say Bitcoin, I mean all of the crypto, okay? I would say that this group is coming of age pretty quickly. And some people feel that the higher they go, the more speculative the cryptos become. I feel that the higher they go, it means the more adoption there is in the marketplace of the idea of crypto. And I just thinking to myself before, if we started fresh with the dollar today, let's just say, for example, the dollar wasn't born yet. We're just going to start the dollar today, right here, first quarter of 2021. Let's start a new currency, the dollar. It would look nothing like it looks now, because the dollar looks just like it did for over 100 years. I've never actually seen a dollar bill from the 1800s, but I've seen old dollars before. When I do find really old dollar bills, like 50 years, 80 years, 100 years, I do find them. I found them when I was younger. I kept them. I have them. I still have them, like souvenirs for me. I don't know if they're collector's items or not in the greatest condition, but I enjoy that kind of thing. So if the dollar came around today, it would look nothing like it looks today, like actual paper currency that we have to chop down trees for and make a special kind of paper and put special artwork and designs on it so it can't be counterfeited or can't be easily counterfeited. And then we have coins like this metal. Like we actually carry pieces of metal coins in our pockets. Like, how archaic is that? I mean, in like what for thousands of years, humanity's been using physical pieces of metal as currency, gold bars, silver coins. It's like so archaic in today's world. If we started with $1 today, it would look a lot like Bitcoin. And some different things. I mean, Bitcoin has a finite amount of coins. The dollar doesn't have a finite amount. The Federal Reserve can manufacture and destroy currency as it sees fit in order to achieve certain economic goals, like either higher or lower inflation or higher or lower employment, because that's the dual mandate of the Federal Reserve: inflation and employment. So, but if a dollar came out today, it would look like a crypto. It would act like a crypto. It would just be electronic credits. And the thought of even like having a credit card, which is something that has been widely used for the last 50 years. I mean, it's like archaic to actually think that we're still carrying pieces of plastic. Like I'm in my 50s. I'm still carrying pieces of plastic in my wallet the way my parents did when I was a little kid. It's amazing how that is still accepted. And I think the only reason it is accepted is because we're used to it. If you have a Visa card, for example, it's just a spending account, a credit account. You want to call it credit card account, then go right ahead. But it's just a credit account. So all you need is, a barcode on your phone to access the account. Like literally, if you have Apple Pay, you could cut up your credit cards. You actually don't need them anymore, except for that one time when you need to scan your card into your phone. I guess you need it for that, but there's probably a workaround around that. So that's my story. And by the way, if the dollar was tied to a finite amount like Bitcoin, I forget the exact number of Bitcoins are allowable, but I think most of them have already been mined. But if you tied Bitcoin directly to the dollar, Bitcoin would be, it's hard to say how much higher, but I think it would be substantially higher. Just like if you took gold and we went back to the gold standard, gold would probably go from like $1,800. I'll just take a guess to like what, $500,000 an ounce. And then we would find a lot more gold because it would be so profitable to mine gold that we'd all be digging holes in our backyards to find a little piece of gold. Because when humanity finds a need for an element, we have always been able to find more. Just like oil. Remember, 10 years ago, we thought we were running out of oil. And in the last 10 years, fracking came along, and it turns out we are the biggest producer of fossil fuels in the world, if you include natural gas. It's really remarkable. So what else did I want to talk about? So let's just take a quick look at the bond market. And then we did crypto, we did stock. We haven't gone over the bond market yet. All right, here, let's take a look at bonds. All right, the 10-year Treasury, still over 1.6%, but it backed off a little bit. Just that alone, just basically staying flat from Friday's big bond move up in yields. We had a move up in bond yields on Friday, just to see it stop, meaning it didn't just go from 1.6 to 1.7 to 1.8, was enough for people to feel confident. Look, my call is this, my opinion: the stock market, the bond market, the stock market could handle higher rates if bonds go down and yields go up, right? Because there's an inverse relationship. When bond prices go down, yields go up. Okay. So, but stocks could handle it as long as it happens slowly. It's the speed of interest rate, rises. I don't want to say increases because that sounds like I'm talking about the Federal Reserve increasing rates. But Jerome Powell, chairman of the Federal Reserve, has consistently said he does not believe the inflation story that the rest of the market participants out there believe in. To him, we'll see a lot of inflation because we're comparing, starting next month in April, we're going to be comparing April of 2021 inflation figures and prices to April of 2020. So prices were a lot lower last year because we went into the lockdowns. So a year later, prices are going to appear higher. But the street investors in general, we're not stupid. We're going to realize that prices are up a lot and inflation is up a lot year over year, only because the numbers were so low last year because of the pandemic. What we're thinking about is from April of 2021, next month, to April of 2022, will they continue the same upward trajectory? Jerome Powell says, no, we won't. We've got plenty of capacity for mining, for manufacturing, for technology. There's no shortage of capacity in the world that would justify a consistently rising inflation, excluding food and energy. And I'll end it by saying this. I have to get this kick in. It's not really a kick. I'm seeing a lot of posts that are very misguided in social media that says, oh, look at Biden. He's president. Now gasoline is going up. It's nice to blame. It's easy to blame somebody, but the United States and the rest of the world sharply curtailed production because of the pandemic, because of a sharp, sudden reduction in demand. And now that demand is going up for gasoline and for jet fuel, prices are going up because of demand, but the supply will increase. Okay, the supply will catch up. It'll take some time. I don't think we're going back down to where gasoline prices were a year ago. We're back to 1980 prices, but 1982 prices. But this move up will slow down, and that's the whole thing. If you believe that the inflation we're going to have, and I'm telling you, we're going to have higher inflation numbers. If you believe it's transient, temporary, then you're not worried about valuations. You're not worried about the Fed jacking up interest rates. If you think it's going to be long lasting and somewhat, let's say, a multi-year cycle of higher inflation, then you have to worry about stock prices and high flying stocks. And this is just what we're trying to figure out. So every time the 10-year treasury yield rises or falls, or you see any whiff of inflation, people get spooked because they're trying to figure something out. And it's just going to be like this back and forth. But I still see this happening in a generally upward trend. Hence, we're at or near all-time highs in the major stock market averages. Thanks so much for watching. I'll have more good stuff for you tomorrow. And